Rajesh, very good morning to you. Let me ask the first question today, and it is in the banking space incidentally, so let me ask that. IndusInd Bank, a few people are still venturing out and thinking of bottom fishing here. Would you say that that's not a very good idea considering the kind of erosion that you've seen in capital? Siju from Qatar has got this question. He's looking at a 1-year time frame. Would you venture out and buy IndusInd at this point, or would you suggest that in the context of the RBI monetary policy decision to cut interest rates and likely more cuts going forward, another bank is a better placed option?
Good morning, Alex. As far as RBI rate cut is concerned, 0.25 percentage, that's 25 basis point, was already discounted by the market. Everybody had an inkling that this is going to happen. That was it was already discounted, I would say. And the best part is the change of stance from neutral to accommodative. That is the positive one. And the inflation targets have been reduced for the first quarter to 3.6% versus 4.5%. That's another positive, and this is going to help the entire banking or NBFC space as such going forward. As far as IndusInd Bank is concerned, I think based purely on valuation parameters till now, whatever stands is, I think the valuations are very attractive. It's less than 1 to price to book and other things. But then you never know what will come out, because when things are not that good on corporate governance part, that's a difficult choice to make. What I would say personally is, if you have a good risk appetite, you can have at least 5-6% of your portfolio into IndusInd Bank, not more than that. It's small part, I would say. If you have a good risk appetite, if nothing comes out anything more from whatever has happened, I think it can give good returns in the future. But again, with a caveat, I would say that this is a high risk counter. One should better look at investing in good corporate governance companies or the banks where the valuations are good. HDFC Bank being the best one, I would say, or even Kotak Mahindra Bank for that matter, in the private sector space. In public sector space, there are a lot of banks which are trading at attractive valuation with performance being very good. For example, Bank of Maharashtra, that has been giving good performance for the last 3-4 quarters. Or a Bank of Baroda, even a large cap one, State Bank is doing very well. So why put money into a very high risk asset unless until, of course, you are a money person who is ready to take high risk.
Got it.
These are the counters I would recommend.
Right.